Hey everyone, welcome back to Corporate Decoder, the place where we try to figure out what companies are really up to. Today, we're diving into a report from reAlpha Tech Corp, and let's just say, things might not be as shiny as they appear at first glance. It's like finding out your dream house needs a lot more work than the listing suggested. This report is basically a snapshot of how the company is doing, the main takeaway. Their revenue, or the money they're bringing in, is a bit lower than expected, and their cash is shrinking faster than you can say real estate tech. So, let's break down what this all means. First up, let's talk numbers. reAlpha Tech estimates or guesses that their total revenue, the amount of money the company made for the last 3 months of the year of 2024, will be somewhere between $500,000 and $600,000. That's like hoping for a big bonus and getting a pat on the back instead. And for the entire year of 2024, they're predicting somewhere around $900,000 to $1 million. Now, here's where it gets a little more interesting. The company had about $3.1 million in cash at the end of December 2024. That sounds like a decent amount, right? Well, not when you realize they had $7 million just 3 months earlier at the end of September. That's almost $4 million gone in just 3 months. Think of it like your bank account suddenly having a huge chunk missing. So what happened to all that cash? Well, the company says that this decrease, this loss of cash, was mainly because they paid $1.5 million to buy another company called Debt Does Deals, which also goes by Be My Neighbor or BMN. It's like buying a fixer-upper house. You spend money up front hoping it'll be worth more later. They also spent more on running the Be My Neighbor business after they bought it. Now, there's a little disclaimer here which is important. These numbers are preliminary, meaning they are not finalized. It's like a rough draft that could change. The company's management, the people in charge, put these numbers together based on what they know right now. The company's actual financial results, the real numbers, might be very different from these early estimates. So don't take these numbers as gospel or the absolute truth. The company also mentions that their accountants, GBQ partners, haven't checked these numbers yet. So everything is still up in the air. And just a heads up, this information is officially part of the company's public record. This information will be used or referenced in any other legal papers they need to file. Finally, the report includes a list of exhibits, which are basically extra documents related to the filing. The important part is that there is some extra information that is being shown. So what does all of this mean for reAlpha Tech? Well, on one hand, they're trying to grow by buying other companies. On the other hand, they're burning through cash quickly, and their revenue isn't quite where they want it to be. It's like a race car driver who's pushing the car to its limits but might run out of gas before the finish line. Let's break this down a bit more. Assessment of company direction. reAlpha Tech is definitely trying to be aggressive in the real estate tech space, but they need to show that they can actually turn these acquisitions into real profits. Buying Be My Neighbor could be a smart move, but only if they can manage the business effectively and make it profitable. Right now, it just caused expenses to rise and they are paying the cost in cash. Notable risks or opportunities. The biggest risk is that they continue to burn through cash without a significant increase in revenue. They need to prove that their business model is sustainable. The opportunity is that they could become a major player in the real estate tech market if they can successfully integrate their acquisitions and grow their revenue. Stock price outlook. It's tough to give a precise stock price target without more information, but based on their current financials, I'd say a reasonable price range would be between $1 and $1.5. This is based on a simple multiple of their projected revenue, which is a pretty conservative approach given their current situation. Conclusion. I'm leaning towards a slightly bearish or negative outlook on reAlpha Tech right now. They have potential, but they need to show some real results before I'd be comfortable investing in them. They are spending their cash reserves quickly, which may lead to some form of dilution, where the company offers more shares. Thanks for watching Corporate Decoder. If you found this breakdown helpful, please subscribe, like, and comment below. Let me know what company you'd like me to decode next.